Hello and welcome to Leaders of Tomorrow, India's largest platform for entrepreneurs. I'm Sunanda Jayasheelan. Today, part 2 of a digital first masterclass that we do, inviting entrepreneurs like yourself to log in live every Friday 5 to 6 p.m. to listen to some of the country's biggest experts talking about the most topical issues. Tonight, we're talking banking in the new normal, discussing everything from the bad bank announced by the finance minister in the budget to NPA's liquidity, what it's going to look like in 2021, what you, the entrepreneur, can know if you're looking to fundraise, that and much more. Let me introduce our panelists. Anand Sinha, former Deputy Governor, Reserve Bank of India. Naina Lal Kidwai, former country head, HSBC. Shubhada Rao, founder, QuantEco Research. Ladies, Mr. Sinha, thank you very much for taking the time to speak with our entrepreneurs today and really put the focus on what are the changes we're seeing when it comes to banking and what you think those changes are going to look like. Let me start first up by trying to get an outlook of sorts, a crystal ball gazing of sorts, if we can, for 2021. Mr. Sinha, the question is to you first. What are the changes that you're expecting the banking scenario, the liquidity situation in India is really going to look like for 2021?
Thank you. 2021 has the potential to look very different from what has been the situation so far. But it all depends on the execution and the speed of execution. So even if we do not see many changes on the ground in this year, we can certainly hope for. I'm not saying that we will not see. All I'm saying is it depends on the speed of execution, the design of execution. So in the least, we should see changes happening or changes or moving on a way towards major changes. Now, those major changes from a banking perspective, as you know, the system is saddled with NPAs and the Corona has worsened the situation, even though it is not apparent because of various forbearance measures and Supreme Court decision, etc. But once all this is unraveled, we can expect a sharp spike in NPAs. But we need not be afraid of NPAs. I mean, NPAs basically should not be treated as anything more than an accounting entry, in the sense that these are the accounts which cannot service their obligations in terms of the contracts, and therefore remedies have got to be found out.
Naina, I do want to give you the chance to give your opening comments as well.
We entered COVID with what was indeed a challenging year for a lot of MSMEs and industry. Going forward, as we look at the banking sector, there's a lot of change in the air, announcement on 2, maybe even 4 privatizations. We have already seen a bunch of public sector banks come together into groupings, and the government has been well on the path to make sure that the public sector banks are financially stronger, fewer, and I would like to believe growth-oriented, which means they will need capital in order to continue to support the needs of industry. We are entering the next year with NBFCs also having a bunch of issues, and NBFCs have filled very important gaps in funding. But as they come out of the cycle and begin to open their checkbooks in terms of more investment in different sectors, and particularly as they resolve some of the NPA issues, there are NBFCs that have NPAs up at the 80-90% level. We need more banks, we need more institutions, we need more money in the system. Now, we also seeing that when the liquidity exists, there's a risk aversion to lend. And I fear that the risk aversion will not go away. There are institutional mechanisms that are being considered, like a new development bank, more facilitation through what we refer to as credit enhancement, particularly for the infrastructure sector. But all this is going to take time to come in. So I fear for the next year, it's still going to be about money not being readily available to everyone who needs it, even though there may be sufficient liquidity in the system because of the risk aversion.
Okay, what can an entrepreneur then do in a situation like this is what we're going to discuss over the course of this masterclass. Shubhda, the macroeconomic picture, what's that looking like? Let me get your opening comments.
I think after a washed out year of 2020, 2021 is going to be based on 3 V's: the virus, the vaccine, and the V-shaped recovery. What we imply is, are there any lingering risks or resurgent risks related to virus? Does a second, third wave once again derail the nascent economic recovery, both globally as well as on the domestic front? The second is the vaccine. It's a strong mitigant to the risks of virus lingering longer. As soon as we have a larger share of population getting vaccinated, that risk will start abating a bit as we progress through 21. And third is we have seen both on the globe as well as in India, a recovery which has surprised since last 1 or 2 quarters. The speed of recovery has been uneven. We've all been talking of all the shapes of recovery. Most of us are looking at a V, but is there a K within a V? I think that is where we need to closely evaluate and examine. Definitely with a sharp contraction of 2020, 2021 is bound to be a double-digit growth year for India at least. And that would imply that there is a recovery taking shape. But is it going to be a uniform recovery across sectors, across segments? Probably not. It will take a while longer for services and contact intense sectors to come back, and that we would see once the vaccine rollout is far better spread out, and a larger share of population undergoes that. But having said, definitely the speed of recovery has surprised almost everyone, to the extent that the policymakers are now calibrating at the government level how to nurture a more sustainable recovery, and at the central bank level, how to calibrate the liquidity and interest rate management so as to not disturb the nascent recovery, but at the same time, do not allow incipient risks to derail the recovery, namely inflation and interest rates. So I would say we are in a better position than we were a couple of quarters ago for 2021 outlook, but it's a lot of ground to cover, both at the policymakers level and of course at the economic activity level, where the entrepreneurs will have to sieve through the sectors that they are in terms of measuring the risk and mitigants to risk.
Okay. You're sounding optimistic, Shubhda, so that's perhaps good news. But Mr. Sinha, you started today's conversation by talking about NPAs. I want to come back to you, and maybe Naina, if you could jump in on that as well. Data available as of June 2020 showing that NPAs for SMEs spiking to about 12.8% versus 11.2% on a Y-on-Y basis. Would you be concerned, or would you say it's essentially what happened during the lockdown and the pandemic, of course, and that we're expecting that things will start easing out?
No, I would not be concerned in the sense this was inevitable. It had to happen. There is no way in which one could have avoided this situation. And therefore, what is important is to go ahead with the resolution part. Now, government has announced a scheme under which AMC and ARC will be established. The ARC will be doing the debt aggregation, and AMC will be raising funds and buying those and all that. So the question is that how well it is designed, how well it is executed going forward. Now, it brings us to the question whether it will be in public sector or whether it will be in private sector, because that may have a bearing on how does it function. We know the public sector gets very constrained in taking commercial decisions. So these are the design factors that will have to be thought of very carefully. But in the meantime, and of course, the moratorium on IBC has not been renewed, so the IBC should also come back into play. But the point is that there are so many schemes for dealing with NPAs. I have a feeling, and I have got some feedback, that ultimately, in order to be on the very safe side, that people are banking only on IBC by and large. What does it mean is that eventually we will be making IBC also inefficient. I think we can deal with NPA situation in a better way. One, as I said, design of the new system that is being thought of. And the second is that banks should use all methods available to them to deal with NPAs and not really wait for this scheme to come or for sending the cases to IBC necessarily.
Okay. Naina, would you agree that the NPA spike for MSMEs was inevitable, as Anand is saying?
Well, it certainly looks so, and RBI's own estimates are a little north of the numbers that you set out, and they are higher for the public sector. So it is a given. And I think speed is of the essence in terms of enabling these companies to move ahead. The issue with NPAs happens that when you get into an NPA, in fact, banks become more and more reluctant to lend and the rate of interest goes up. So the very things you need, the oxygen to survive, begin to get taken away. And that is why the speed of resolution becomes important. I think Anandji is absolutely right. The IBC needs attention. It's working. That's the good news. The bad news is it's taking far too long for these resolutions. And we need more of this institutional framework that can address these NPAs in time. It is going to take time for the ARC to be set up for this resolution. The government has just said it, so therefore it is an enabling mechanism. But the structure right now that is being looked at is the banks themselves have to contribute to setting it up. So by the time all of this emerges, what shareholding, who puts how much capital and the process, we're still a while away. I think it's a great move, but the next 12 months are critical and we need a lot of this to be addressed in the interim.
Let's take a quick break on that note. On the other side, we'll continue this conversation. To stay tuned. Welcome back with us here in Leaders of Tomorrow, and tonight we're focusing on banking and the new normal. Let's talk about the domestic market and what's really happening globally at a time when more and more businesses are looking at the domestic economy, and when the strength of the domestic economy really has been tested. If we were to look at some sort of global stimulus, are we expecting that we could see the trickle-down benefits really of that as far as India goes? And if yes, which sectors perhaps are best poised to be able to really benefit from that? Shubhada, to you first, but it's open to all three of you.
So, definitely both the central banks, particularly the Fed and the ECB, as recent as last couple of days, have once again reiterated their commitment to extend the fiscal stimulus. We are anticipating US fiscal stimulus to be announced anytime to the extent of 1.9 trillion. Likewise, Madam Christine Lagarde also has ensured and assured the markets that there's not going to be any premature withdrawal of stimulus. In fact, they want the stimulus to continue. So obviously, all of this will have a positive, beneficial impact of the gush of liquidity that will still persist right through 2021 and also to the part of calendar year 2022 on India's economy in the form of foreign direct investment and portfolio investment as well. But key to India's sustained growth to come back into shape will be foreign direct investment. If I were to look at the spillover of the global stimulus that will still continue through the next 12 to 18 months for sure. I think in terms of what sectors that India could benefit, I would like to segregate those on 2 or 3 counts. One is where the Indian domestic strengths prevailed and the COVID shock rendered them incapacitated in terms of stalling of production. Those definitely will, show a fair amount of recovery as the unlock gets completed and vaccination rollout is broader. Yeah. So we could look at hospitality, all the services related sector, particularly hospitality, transportation. If we look at data points, it's textiles, auto, all these will come back and bounce back. If I were to look at post-COVID, what are the new normal, behavioral kind of tracing, then of course the pharma, the digital economy, organic farming, chemicals, all these will also begin to look attractive. Okay. And finally, I think if we were to look at FDI related sectors, it would be, the whole thing, an initiative of PLI, Atmanirbhar, and areas like defense and so on. I think these will start looking attractive. It's going to be very critical to see on the ground the implementation of the policies that have been announced so far post-COVID, because implementation is going to be extremely key to be able to maintain India's attractiveness in terms of destination. We already have Vietnam overtaking us in terms of China Plus model that has evolved. Vietnam's share of the number of companies that have come out of China stands at about 30%. India is still at 10%. I think India needs to focus more on expediting the policy initiatives, getting actually on the real front to get them implemented, that is.
The quantum of loans for small businesses always much smaller than large businesses. The base, of course, is much smaller. But conversations around NPAs for SMEs and MSMEs, small businesses, is just so much more in focus compared to that for large businesses. Mr. Sinha, Ms. Kidwai, it's open to the both of you. Shubhada, if you want to jump in as well. Ms. Kidwai, how would you want to perhaps take this question on?
My view is we need to sort NPAs out, period. Because an NPA for a large company has ramifications all the way down the line, because their supply chain down the line it has a lot of SMEs and MSMEs. And we've seen how when industries go down, they stop extending credit. And then when that credit goes, funding goes out the window. We saw this also through government itself, where government is now very focused on clearing its dues. But if big industry gets into a mess, it's very, very critical for SMEs. The focus, I believe, is across the board. I think a large absolute amount of NPAs is absolutely large industry. One big company can really account for a very large absolute quantum of NPAs. And there are many large companies, and then many in sectors like hospitality, which are heading that way if we don't them to resolve the issue. I think the mechanisms we have are actually easier for the larger ones to sort out. My worry is that the MSMEs who need that helping hand are the ones where we should give more attention to make sure they don't remain as NPAs and that they get the liquidity that they want. And the risk aversion that we are seeing in this banking sector is one that gives that helping hand to smaller industry. But both need support because they're intertwined.
Okay. Mr. Sinha?
Yeah, I would agree with Naina that when we talk of NPAs, when we worry about NPAs, the large corporate NPAs do much more damage than what the small sector NPAs do. But it doesn't mean that the NPAs in the small sector do no harm. They do a lot of harm to the employment scenario in particular, because the industries can close down and a lot of people can go out of employment. So it's not that attention is not paid to that. Now the point is the risk aversion is very real. It's not going to go away. One of the other reasons is, apart from the sensitivity of the public sector bankers to the vigilance aspect, the other fact is that they just don't have enough surplus capital to be able to take the kind of risk that would be needed if you are dealing with NPAs, if you are nurturing them. Therefore, I feel that some of the steps which have been taken in the COVID crisis, support from the government for liquidity, support from RBI for liquidity, infusion of equity, partial credit guarantee. These are the schemes which can continue for some more time till the situation normalizes. But the fact is that the SME NPAs should concern us as much, but the problem is that they may not get as much support as a big corporate can get in resolution of the issues. So that is where I would call it a market failure, where government has to step in and continue with some of the things that they have been doing, and RBI can continue to provide some more liquidity wherever needed.
Sure.
Nanda, if I may add here just a brief point that, the COVID shock has definitely led to some kind of scarring, a permanent scarring on economy. And what do I mean by that? That when we estimate that what if COVID had not occurred, what would have been the economic growth trajectory? And post-COVID, what has been the recovery? It still is much lower than the no COVID situation kind of a growth trajectory. What do I mean by that? Almost about 8 to 9% of likely permanent loss of output in our estimate has occurred if we trace the industrial production data. And my fear is a lot of that output belongs to the MSME segment, because some of them peripherally may have, found it difficult to survive. So it also implies that the pace of recovery has been somewhat uneven for many of the MSME segments, which have not been able to either access finance or any demand visibility, thereby they do not have deep pockets. And all these probably may have led to some of the closure of some of the units. And that is what we need to just get more validation as the data gets on board over the next 1 or 2 quarters.
All right, that's all we have in this masterclass. But we do 20 such masterclasses over the course of the entire season 9 of Leaders of Tomorrow. We finished 3 so far. If you want to know what you're going to be focusing on next, do head on over to our website. You can also let us know if you've logged into any of our masterclasses, what you thought of the conversations. If you want something that you think we should definitely be keeping an eye on, we love hearing from you. Our details are on our screens as we speak. Thank you so much for watching. Have a good night.
As we look at the DFI or indeed NPAs going forward, one of the big sectors that has contributed to this is infrastructure. And clearly we need infrastructure. In fact, the budget has put a huge focus on infrastructure. I think it's going to be critical for us to make sure that the projects that come in are indeed bankable and not the ones that will cause a new DFI or indeed more NPAs in the banks.
Hello and welcome to Leaders of Tomorrow, India's largest platform for entrepreneurs. If you've got any questions related to any aspect of entrepreneurship, we've got it covered right here on the show. I'm Sananda Jaiseelan. Tonight, we're bringing you part 2 of our Digital First Master Classes, where we discuss the most topical themes that are relevant to the entrepreneur, and we invite, in fact, every entrepreneur to log in every Friday 5 to 6 p.m. to listen to some of the biggest experts. Today, we're bringing you highlights from a masterclass that we did around banking and the new normal, discussing really the bad bank that was announced by the finance minister in the budget, discussing the DFI, discussing the way forward when it comes to NPAs, what digital lending is going to look like for entrepreneurs in 2021, that and so much more in this panel discussion. Let me introduce our panelists. Anand Sinha, former Deputy Governor, Reserve Bank of India; Naina Lal Kidwai, former country head, HSBC; Shubhada Rao, founder, QuantEco Research. What are the changes that you're expecting the banking scenario, the liquidity situation in India is really going to look like for 2021?
2021 has the potential to look very different from what has been the situation so far. But it all depends on the execution and the speed of execution. We can expect a sharp spike in NPAs.
I fear for the next year, it's still going to be about money not being readily available to everyone who needs it, even though there may be sufficient liquidity in the system because of the risk aversion.
Please wait while your transaction is processed. Please take your cash.
Mr. Sinha, you very briefly spoke about bank privatization. Anything that you might want to add to what we've discussed already?
I personally support privatization, not because, let me make it clear, not because the private sector has covered itself with glory, certainly not. The global financial crisis has been brought about by the private sector, not by the public sector. And in India also, we have seen so many corporate governance failures in the private sector. But what happens is that at least they are not hobbled in terms of doing their business commercially. So while the question of corporate governance will have to be addressed for everybody, by privatizing, we can at least remove a very major constraint on the functioning of the bank. The other very important thing is that banks, particularly the public sector banks in India, are not very adequately capitalized. Now, let me explain what do I mean. Yes, certainly they are above the regulatory minimum. But the trend today in the world is to have much larger cushion. In fact, if I give you statistics produced by BIS, that is Bank for International Settlements, going into COVID, they had carried out a survey of about 5,600 banks from 142 countries. And they found that they had $5 trillion of capital in excess of regulatory minimum. And their common equity tier 1 ratio was 14.7% or so, whereas the same figure for Indian banks was 11.3 or 4%. So 3% is a huge gap. And not only that, in the 11.3 or 4%, what I'm talking about, there will be a very skewed distribution. There will be a set of banks which will have even lesser capital. So government, with its difficulty in capitalizing the public sector banks very aggressively, privatization is a way forward in that direction. Of course, the banks have to function well in order to attract capital, but then the market will find a solution for that. So for various reasons, not because the private sector is totally free from all these deficiencies, but nevertheless, as I said, all in all, taking into account all factors, privatization is very important of public sector banks, except that government has to be in those areas where there is a market failure or where public good is to be the economy. And therefore, the concept of DFI, which is coming up, is certainly a positive step, because contrary to what people think that bond market will solve the problem, actually it will not, because all the world over, in the execution stage, when the risks are very high, generally it is done by banking funds, because negotiations, resettlements, rescheduling, these are very, very difficult when you have bondholders financing a project. After the execution part is over, of course, then it can be passed on. So from that perspective, banks and DFI are very important. And that is, again, a very positive step stated in the budget, because when we did away with DFIs, we did it away for certain reasons based on certain assumptions. Also because some of the support was withdrawn in terms of helping in their lowering their cost of funds. So when we now go for DFI, we will have to take care of all the things which led to their being dismantled, so that we can have a DFI working on a very sound footing to begin with.
I was just going to say that as we look at the DFI or indeed NPAs going forward, one of the big sectors that has contributed to this is infrastructure.
Yeah.
And clearly we need infrastructure. In fact, the budget has put a huge focus on infrastructure. I think it's going to be critical for us to make sure that the projects that come in are indeed bankable and not the ones that will cause a new DFI or indeed more NPAs in the bank. So a basic restructuring of infrastructure and the way it's financed is also going to be very important to look at. And the second point I would just lend my voice to is on privatization and the need for capital. It really hurts to see tax-paid money going into capital, into banks. And I think that if we can reduce this burden on taxpayer money and the fisc, it would be good. And privatization of a few, and it is just a couple of banks, would certainly go some of the way to help in terms of relieving this burden.
Okay, I just have a question as far as sectors are concerned. Shubhada, maybe you could come in on this. We were talking about the trickle-down effect as far as the domestic economy is concerned and the recovery. If you're looking at a K-shaped recovery, for instance, with services being the bottom half of K, what should entrepreneurs who are in this space then perhaps do if they want to see increased growth compared to perhaps what's happening in manufacturing?
I think, vaccine rollout is going to be the biggest stimulus for this sector, because as the risk abates of, contact intense sectors through a vaccine rollout, people would be more willing to travel. The government would be more willing to open up these sectors of hospitality, aviation, and, a whole lot of service related sectors could then see further impetus as there is more safety perception amongst the people of the country. So I think, to me, instead of direct sectoral specific stimulus, I think as soon as the sentiment improves basis the vaccination, my sense is services would naturally see an improvement in terms of economic activity.
Even as the number of alternative lending, options, whether it's peer-to-peer, etc., is increasing, there's an increased number of regulations, KYC, scrutiny, etc., and that is daunting for an entrepreneur who's looking to expand or enter into this space. What should we do? Naina, if you want to take this on first, and then I can come to you, Mr. Sinha.
So, there is fortunately some attempt to address this and talk of a central sort of KYC, which means that you don't have to do this multiple times. There's no getting away from an eKYC process, but we can certainly make sure that it's not required multiple times. The access to loans, the 59 minutes and you access money, these are all ways, digital and otherwise, to make life easier. But yes, easing paperwork is important. I think the whole area of credit rating and ability to access mature information, the fintech, which was alluded to both by Anand and Shubhada, are very important as well, because these are all data points which enable very quick turnaround of loan applications. And I think it's an area, I should add, that particularly women entrepreneurs have suffered from, because it turned out that over COVID, many women tended not to be borrowers, but they began to need money because of the downturn. And when they went to banks, because they didn't have a credit history or a CIBIL rating, access to funds was not there for them. This again is being addressed now, but as the more data points that any lender has, the better it is for quick turnaround. So we should all be looking at creating our own credit histories in a way that enables us to access the funds when we need it.
So, would you want to answer that as well?
Well, as she said, there is no getting away from KYC and some of the rigors of the regulation. But what should certainly be done is to see that there is a greater ease in doing that. For example, video KYC has been introduced recently, and repetition should be avoided as far as possible. So that is one thing. And as far as credit dispensation is concerned, I have already mentioned earlier that particularly in those segments where you don't have the kind of traditional statements, financial statements for bankers to assess credit risk, you have to adopt more modern methods, which are being done even in India to some extent, and certainly on a much larger scale in China and in some other countries. So that is the future. We have to collect as much data as we can and use that data to come to a conclusion about the behavior, about the creditworthiness of the person. But let me also add that when data is so freely shared, which is the open banking concept in the world, where the data is shared with the consent of the customer with various financial services providers. And even in India, we have that. Account aggregators have started. So there are risks in terms of the privacy of data, maintenance of confidentiality, etc. But that can itself become a big problem if that is not addressed properly. So while we emphasize on using more and more data as today's oil, so to say, we have also to give enough attention to the confidentiality and privacy issues in dealing with data.
Let's take a quick break on that note. On the other side, we'll continue this conversation. Just stay tuned. Welcome back with us here on Leaders of Tomorrow Masterclass. Tonight, we're focusing on banking and the new normal. I also want to very quickly address the point of credit penetration. On one hand, lenders, when it comes to the MSME space, are saying they're seeing a nearly 3x time, kind of growth. One of the fintech companies that I was speaking with, they're targeting nearly 12 million MSMEs coming on board, a large part of it being driven during the pandemic. On the other hand, credit penetration is still very poor in India. Less than 4% of MSMEs in India have access to formal lines of credit. My question to the three of you, for an entrepreneur in this space, how do they perhaps address the question of customer education when it comes to increasing really credit penetration, when it comes to increasing the number of people who are coming onto digital platforms? Open to the three of you. Ms. Kidwai, would you want to take this first?
Well, it's a bit of a fear of being able to handle the process. And the tougher it looks from outside, the less likely it is that people come in to this network. We are also, I think, at a stage in our own growth where the ability of the lenders or the desire of the lenders to come into first-time borrowers is low, which was the risk aversion we started off this discussion with. So I think it's a tough time to look at new borrowers coming into the system, just because there are enough old borrowers with problems and the risk aversion that unfortunately persists in the system. The one area where I think there is scope for new borrowing is through microfinance, because that happens through now what is a well-tested model of self-help groups, provided if the political system doesn't go in to create an issue, as we have seen historically, where suddenly loan waivers become a given and the whole sector then collapses. But if we can provide first-time borrowers at the grassroots level the support through microfinance, this is absolutely the right time to do it, and to help with livelihood simultaneously, so that they're borrowing in ways that they can also repay as they become self-made business people and entrepreneurs, and both at the rural and the urban level. So we need more microfinance more at the urban level, because that is still a model which is quite new, and more penetration at the rural levels.
Mr. Sinha, you were saying data is the new oil. Opportunities when it comes to small businesses that are looking at the financial space in 2021. My question to you is, what is the biggest opportunity, your advice to them as to how to tap that? If there are any specific sectors that you think are especially going to become more and more important when they're using digital platforms of lending and borrowing, what would those be? What can you tell us?
Specific sectors I would not go into, but what I would say is that the new methods of credit assessment are the methods by which we can increase credit penetration. That is as far as the methodology is concerned. I also think that we need progress on institutional arrangements, in the sense that we need many more MFIs and small finance banks, so that they can cover much greater part of the country and into much interior parts of the country. And the third thing is that today in India, even a person from very lower strata of society knows how to handle mobile. They are all very conversant. So to get into the digital medium for your business is again a question of initial hesitation, but I don't think it should be unsurmountable, given the fact that everybody is very familiar in dealing with mobile phones. And to that extent, the education part becomes extremely important. As you know, there are institutionalized arrangements from RBI side, from SIDBI side, to disseminate education to the small sector. So that is something with added input from a digital perspective is what is needed.
Okay. My last question then, Shubhada, I'd love to hear from you. You've not so long ago turned entrepreneur yourself. So if you can really talk to our entrepreneurs on the overarching theme that we have here in the Leaders of Tomorrow, which is empowering a billion dreams, given, of course, the policy stance that we've seen on the part of the central bank, given all the commentary we're seeing on the Indian economy, what would you like to tell today's audience?
Thanks, Sunanda. I think, I'm an economist turned an entrepreneur. So I would like to look at through the prism of being an economist. No business happens in vacuum. You need to understand and grapple with the ever-changing dynamic macroeconomic environment, both domestic and global. So be it a large corporate, be it a MSME entrepreneur, it's extremely important to understand and perhaps stay prepared to mitigate any forthcoming or anticipated risks. And that's where the policy stance comes in. The rest of the world is trying to get inflation up, that is reflate their own economies. But for India, the COVID season has actually led to high inflation and significantly higher inflation than we had seen in the preceding year. So, coming from a 6.4 average inflation, while it will ease, there is not going to be an easy path going forward. We have perhaps seen the end of easing cycle of interest rates. So from here on, we will see a prolonged pause, and going forward, maybe even in the last quarter, we could see interest rates moving up. Liquidity will be kept easy, but the surfeit and the glut of liquidity may not persist. RBI, the central bank, will have to calibrate that liquidity to some extent so as to it doesn't push the inflationary pressures up. So where do we stand in terms of the macroeconomic environment? Clearly, there is a V-shaped recovery, but there is a K hidden in that V. We are going to see a multi-speed recovery. We are, as far as interest rates are concerned, we could enjoy this kind of interest rate environment, not for too long, maybe another 3 quarters, but then we have to prepare for rising costs. Last, I think I'm sure most of the MSME entrepreneurs also have a trade interest. So where do the currency stands? What is the USD INR level likely to be? Is it going to be appreciating? Is it going to be depreciating? In our opinion, the dollar will start weakening again after a brief strength that we saw in the recent weeks. But more importantly, if there's a dollar weakness, what happens to the USD INR? Definitely, we are seeing an appreciation bias building into the rupee level from current levels to maybe 71, 71.5. But that is going to be important. Do we hedge at what levels? If I'm an exporter, if I'm an importer, these kind of decisions so as to protect your P&L as an entrepreneur is going to be extremely critical. So understanding the macroeconomic environment becomes, a very demanding task, simply because there is a huge amount of volatility that we are wading through post-COVID and in the path of recovery, both domestic and global. So in total, I can say that the fiscal and the monetary will need to complement, for further more time, so as to the growth is getting more embedded, a structural growth is getting embedded, but it's not a very easy path. It has to be, you have to be on vigil. You have to keep your mitigants ready if there are any risks arising out of nowhere. So very important that all entrepreneurs keep their ears, eyes open and on their toes when they are recalibrating and fine-tuning their business models in a very new economic environment. That would be my concluding remark.
All right, that's all we have in this masterclass. But we do 20 such masterclasses over the course of the entire season 9 of Leaders of Tomorrow. We finished 3 so far. If you want to know what we're going to be focusing on next, do head on over to our website. You can also let us know if you've logged into any of our masterclasses, what you thought of the conversations. If you want something that you think we should definitely be keeping our eye on, we love hearing from you. Our details are on our screens as we speak. Thank you so much for watching. Have a good night.